Welcome back to the Financial Freedom Summit. I am Nathan Garcia, and I'm so happy to be with you here today to celebrate Independence Day while we are live streaming from Annapolis, Maryland for the Financial Freedom Summit. Right now in this segment, I'm joined by Ken Jefferson. Ken is a longtime friend of mine and associate of Ivins, Phillips, and Barker. And Ken, can you hear me all right?
I can.
Okay, good. How are you doing today?
I'm doing well. How are you?
Pretty good, pretty good. You know, I didn't tell folks a little bit about you, but I know that you grew up in the DC area. You played football at DeMatha, and then you went on to play at Virginia Tech. But what really makes your resume so impressive, in my opinion, is you worked at the IRS, and now you're with Ivins, Phillips, Barker. What do you focus on? Obviously, you're focusing on estate planning, but can you tell folks a little bit more about what you do for people?
Yeah. Not just doing the estate planning part, but also kind of advising on some tax planning. A lot of our clients are business owners, executives that are going to have taxable estates when they do pass away. So kind of helping them plan for business successions or how they want to benefit their children or grandchildren. So we do some of that, more of that full service sort of advising and consulting with clients just so that they can see what all of their options are and can mitigate any taxes that will be due when they do pass away.
Oh, that's great. Ken, take 1 second here. Folks, we have a technical issue here, so just give us 1 minute. We're going to readjust our audio, and we'll be right back. Sorry, Ken, the audio didn't come through in the initial stream there.
It might just be on my end that maybe I just needed to change.
Can you play it on your Facebook real quick? See if it came through.
So I have in the 50/50, I'm playing that audio. Yes, maybe I did set the audio to the guest. No, for the guest I have audio set for both HDMI and HDMI. Sorry.
Should I take this out?
No. Should we just have them call in the Zoom audio and then plug that into the mixer?
If that'll work, yeah. I mean, if that's gonna work. I don't know why you're not getting his audio. Can't. When you were talking to him on the computer on Zoom, you were hearing him.
I could hear him on Zoom, yeah, but I couldn't.
Oh, do we need to go to audio settings and set it to both sources because it might only put you on Bluetooth? Right?
It only gave me the option to go to Bluetooth. I didn't have the option of going into what's it called?
So you just check the audio setting.
Yeah.
I'm sorry, so what are we going to try to do?
Can you hear us?
Yeah, you can still hear us. So this will connect directly to my phone, and so I can just call into the Zoom audio, and then we can pull audio. Is audio coming in through? Yeah. So.
Yeah, I ended up getting this up. So.
Okay.
So you want to pipe audio? You know, what kind of connectors? Oh, you have RCAs. Oh, you got quarter.
So these are going to go line in here.
We'll have to check that. It might be a micro, but I'm not positive about that.
All right.
It might be blind, I just don't know.
Okay.
Listen on here to see what's happening.
Yeah, go into control. So this one right here, these are live. So that's up. Okay.
Here, you just went into there, is that right?
Yep. So this is my,
6, 6, 5, 6. We got to bring them up. Down. Level is turned up to 15. All right, I'm getting audio now.
you are getting audio?
Yes.
Okay.
Press pound to continue.
Oh, sorry. Okay.
Meeting is being recorded.
Okay. Is it coming through now?
Yes, I'm hearing you.
Okay. I'm the only one talking. Can you say something for me, please?
Yeah.
Okay. There.
Okay, sweet.
Can you hear him on that?
Yes.
Okay.
So how do I get it to our?
So now that's coming in the 3.5 millimeter jack. So go into the audio settings and include the 3.5 millimeter.
All right.
You see it as input? Okay. All right.
Just to make sure, I won't hear it right now. I won't hear it till we go live.
Yep. Pull him back up on Zoom. And that's the only thing that you should see is just him. That's fine. It doesn't matter. Go to gallery view and just have him on there, and make sure you mute that as well. Mute that one. So can you hear me? Yeah, unmute that one. All right. We good? All right.
I've got to put input not only for that, but for this guest.
Okay.
Yeah. Video. You want him to be able to talk when you're on single shots of you?
Yeah.
Okay. All right. Let me fix that real quick.
We've only got about 30 minutes of his time.
Okay.
All right. Count me down. Ken, we're going back on. Sorry. We'll just pick up from what you do at Ivansville. Can you hear me, bud?
Yeah,
Okay, good. Okay, can you share your screen again?
it's shared.
Okay, awesome. Okay, tell me when you're ready.
Okay. All right. I'm ready. So,
I know, I don't know how it is, so I'll just go. I'll listen to him.
I'm just gonna go for it.
Yep.
Okay. Ready. 5, 4, 3, 2.
All right, technology is keeping us humble today with all the challenges, but fortunately we still have Ken Jefferson with us to discuss estate planning, the ability to create generational wealth here in America. And we lost our sound right when Ken was telling us a little bit about what he does. So Ken, I appreciate your patience, and can you pick up from just telling us a little bit about what you do for your clients?
Okay, sure. Yeah. So I'm in the estate planning group at Ivans Phillips and Barker. We are a tax boutique law firm, and within the estate planning group, we provide sort of bespoke estate plans. Where our value add is really finding solutions for complex, novel issues, whether it's blended families, having businesses or international issues, or the combination of all of those issues. That's really where our value is found, is finding solutions that are tax efficient for our clients. We have handled pre-immigration planning to expatriation. We advise on business succession planning. And then we just do the routine estate planning, which is putting in place wills, maybe a will and a revocable trust, your durable financial power of attorney and advanced medical directives. So we can handle the most basic to the highly complex and challenging.
Yeah, it sounds like you have a pretty broad range. And I think what's unique about your practice is the ability to incorporate the focus of tax planning in addition to the estate planning. So
Yes,
that you're,
exactly.
okay.
Everyone's going to have a probate estate, but for those that are going to have a taxable estate, we work to mitigate those taxes for you.
Right. So with the with the estate plan itself, it's really something that many people just don't spend time and actually focus on. So you deal with a unique set of clients, and that they probably have a reason to come to you when either they're getting ready to sell a business, they're getting ready to revoke their citizenship. What's the proper term on that, where you give up their
Expatriation.
Expatriation, thank you. Expatriate their citizenship, or they have a sizable enough estate where it makes sense to do estate planning. But for the millionaire next door, the family that's maybe generating, or they've accumulated $2-3 million in wealth, when is the right time, or what is the reason that they would go get an estate plan done? Because it's just not something that a lot of folks think about.
Yeah, it's definitely hard to get people to focus on it, and especially since it's such a morbid issue. Like, I don't want to think about my death. Like, I'm living life now, but it's good to go ahead and do that planning now, because everyone, as I mentioned earlier, everyone's going to have a probate estate, and so you want to direct how your assets will pass at your death. Otherwise, the state will, and every state has a different set of rules for how things will pass, and it may not be how people assume. So it's good to kind of put your wishes down now, and then it can also save you costs, like court costs, professional fees, and then which can whittle away what's left for your loved ones before they can get to it. So it's really good to, and it's really smart to kind of save money in the long run by taking and engaging an estate planner now. Should I go ahead and go through my? I have this presentation that kind of just goes over the significance of estate planning. I call it Estate Planning 101. Sorry to introduce me. So we're just going to try to answer 3 primary questions. What is an estate plan? Why is it important? And what's involved? An estate plan is, at its most basic level, just to direct the disposition of your property at your death. It involves contemplating not only death, but also your disability during life, and whom you want to give authority to make decisions for you and during any periods of disability, and also who do you want and who do you trust to administer your estate once you do pass away. Really, everyone can benefit from an estate plan regardless of their wealth. As I said before, everyone is going to have a probate estate. An estate plan can also help mitigate the burden of that probate process by streamlining it. A lot of our clients want to avoid probate as much as possible. You can't completely avoid it, but you can reduce your probate estate to such that it's minimal. And so it reduces the cost of the probate and allows privacy. That's a huge concern for a lot of our clients. So if you can transfer most of your assets into a revocable trust, it will bypass the probate process. Probate is a public, the public has access to those records. So if you don't want people to know what you owned, it's beneficial to go ahead and put it in a revocable trust. Let's see. Everyone really should have an estate plan. Without it, the state, as I said, will decide what happens to your your assets. And if you pass away with minor children, the state may put in place guardians that you wouldn't have chosen for them yourselves. So that's something that I emphasize with a lot of my friends that are now having children. I kind of just bring it up and say, hey, have you considered putting together your wills and naming guardians? Name like your parents if they're still relatively young, because if both you and your spouse pass away, leaving minor children, the state could name someone that is really not the best person, because the state doesn't know your family. Maybe that sibling of yours is not as trustworthy or responsible as someone else that you would rather put in place. So that's just one of the concerns that you may have that you can kind of mitigate or take care of ahead of time. Another thing to focus on is if you do fall ill and you can't make medical decisions for yourself, it's great to have a healthcare power of attorney in place to name someone to make those decisions for you, someone that's familiar with what your wishes would be and would honor them. And then a financial power of attorney is another powerful tool that you can really give to someone that you trust to make financial decisions for you. They can sign checks. If you are indisposed and can't do that, they can take that action for you. But just be cognizant of who you give that authority to, because that is a very powerful document. I think I've covered all of this already. The probate process is really just confirming the validity of the will, if there is a will left. If a person passes away undisputed without a will, the process is called intestate succession. Someone that dies that has a will, they are a testator. So if there is no will, it's intestate. It's kind of a weird term to get around, to get familiar with. But the probate process can take up to a year or more. It can be expensive because you have to get professionals to value things. You have to make a whole bunch of filings. There's a bunch of mailings and other things. And then it is a matter of public record, as I mentioned earlier. So if you do have some privacy concerns, you want to minimize what's in your probate estate.
Right. Ken, can you hear me okay?
Yes, I can.
Okay, perfect. All right, so I wanted to ask you a question about, I saw this house that was purchased in our area. It cost about $2 million, and the guy bought it in his own name. Mm-hmm. So we were able to, my wife and I were interested in seeing who owns it. And she said, I wonder what he does for a living. And I said, well, let's find out. And so we went and looked at the property records, and then we looked at the owner, and then we went on LinkedIn.
Yeah.
He's a professor. So tell me a little bit about, like, what would somebody who is malicious do with that information? Is it just that they would be subject to fraud potentially, or what is it that they would, the vulnerability? Why would I want that owned in a trust rather than just in my name?
Well, I guess you kind of covered it. Like, people can reverse engineer and find out who you are, what you do, and then also what other properties do you own? What else are you involved in? So it can really open you up to just kind of just having people know everything about you.
Right.
And so a lot of people will do several layers. So they'll start an LLC. It can be a single member LLC, but purchase the real estate through their LLC and have the LLC be owned by their revocable trust. So it's like several layers of protection, so that you go and look up, oh, who owns this property? A lot of people just name it the name of the street that it's on. So like Pierce Street LLC. Oh, who is Pierce Street LLC? It's owned by some revocable trust. That you can name your revocable trust anything, and it doesn't have to necessarily point to who it benefits. So that's a way that you can kind of get around that during life. And
I've seen that Nevada, Texas, Idaho, Wyoming, there are a select number of states who are a little bit more attractive for setting up that LLC. So do you work with firms in some of those states that would set up those LLCs, or why would somebody have?
Yeah, we've set up LLCs all over the country. Just in this area, we do a lot of Delaware LLCs, and we've also set up private trust companies for just for various purposes for some of our clients. And Wyoming was one of them. They have very favorable tax regimes for trusts, as well as forming LLCs. So we when we don't feel as comfortable, we will reach out and work with local counsel in some of those other states. But we're pretty confident in most of our abilities with regard to Delaware. Of course, the DMV area, we routinely do work in New York and Maine, Florida as well. And then we really have clients all over the country. And so even if we are not experts in the local law, we will confer with local counsel to best serve our clients.
So what level does it really make sense to have that foreign entity, foreign LLC that's in Nevada or in Wyoming? What is my net worth or my suggested net worth that you would look at something like that? Or is it more of a privacy play?
It's more of a privacy concern, but then what are your ties to that other state? It's really a case-by-case, situation-by-situation analysis. There's not necessarily a set net worth, but of course, with each jurisdiction that you are operating in, once they have ties to you, or they're like, you have a business in here, that is gonna have more reporting costs. So it really depends on what you're willing to spend on different reporting costs, filing tax returns, those sort of concerns, administrative concerns, on top of whatever other transactions you are engaging in.
Okay, gotcha. And then in terms of the setup process, what is that? How long does it take to set something like that up?
To set up an LLC, many states you can do that in a day. To form the entity, they have an expedited process. You fill out a form. It's a really simple form for most states to form the entity. And then once it's formed, you apply for your EIN from the IRS. But then after that, you want to have in place an LLC agreement, kind of delineating just the administrative terms of the agreement, how it's going to be taxed, different concerns like that, which is another step that my firm handles routinely for our clients. I was just forming a series LLC in Delaware just the other day, and we put together the LLC operating agreement as well. So we form LLCs and partnerships, and we take clients through that kind of decision process on how it should be taxed, because an LLC can be taxed as a partnership, It can be an S corp. There's different considerations, and depending on what the client wants to accomplish, one or another form is favored.
Right. Yeah, that makes sense. With the tax environment being what it is, you know, it's hard to believe that we will keep marginal rates where they are and not see some higher estate tax rates as well. Why is it so valuable to take action today on some of that stuff? If I'm a 45-year-old business owner or 50-year-old business owner, why do I need to be doing tax planning if I don't plan on dying for the next 30, 40 years?
So a main concern for a lot of our clients is to reduce their taxable estate. So, and then also just with the tax regime currently, there's this huge gift tax exemption that we have to play around with that is set to sunset at the end of 2025. And now would be a great time if you can afford it, which is something that we would help you analyze to see what can you give away. It's best to kind of get things out of your taxable estate. There's so many different ways you can do it. You can do outright gifts. You can put gifts into trust, and there are so many different trust structures you can do. There are GRATs, there are SLATs. GRATs are grantor retained annuity trusts. SLATs, spousal lifetime access trusts. You can start putting things in trust for your grandchildren. So right now we are helping clients take advantage of that high gift tax exemption, kind of lock that in, because especially in this election year, we really don't know where things are going. If there is an administration change, it seems like the estate and gift tax exemptions are going to go down significantly, perhaps even below their prior levels, which was roughly 6 million. So it may be even lower. And so it's good to kind of get in place and try to no one has a crystal ball, but you can take advantage and plan for what the current regime is telling us. Another good thing to kind of take advantage of are the low interest rates right now. We have been helping a lot of clients refinance intrafamily loans. This is a great time to do that with, I think it's like 0.6%. Well, actually, we're in July now. I'm not sure what the exact rate is, but it's ridiculously low. And so you might want to lock that in while you can.
Yeah, that's very smart. You know, one thing that I think is interesting is that you help clients out with the expatriation, and we've seen the IRS rules get more strict around your ability to give up your passport, for instance, or your citizenship over the past couple of years. And so the idea of a second passport has been intriguing to me. Do you look at, or do you help with your clients with any of that stuff and when it would be appropriate?
Yes. So in my practice currently, I have come across situations where our clients have dual citizenship from birth, oftentimes with an EU nation. And so there are exceptions that will allow them to expatriate without hitting that mark-to-market tax, that expatriation tax. But they also have to have, and so you have to have a clean record for, I think it's the past 5 to 8 years or so of reporting to the IRS, and then you can expatriate without a penalty. So we do help people clean up that record. We do see if they qualify for that exception. And then we, on the reverse side, for people that are getting ready to move to the U.S., we do some pre-immigration planning to mitigate what gets brought into the U.S. tax system. Because once you come in, it's very hard to get out without paying some sort of tax.
Right. Yeah, the government's gonna look for their cut where possible. What do you know about the benefits of moving your business to Puerto Rico for the capital gains? They've got a pretty favorable tax structure down there right now. Is that something that you guys have done any work on?
We have, my firm has not had the opportunity to work on anything like that quite yet. However, I don't know if you're familiar with it, but there's a huge estate planning conference that takes place in Orlando. It used to be held in Miami. It's called Heckerling. And so I had a number of conversations with other estate planning and tax practitioners that were taking advantage of that opportunity in Puerto Rico. And so they were pitching that, and I found it very interesting. I just haven't had the opportunity to work on a project on that yet.
Yeah, I forget what it is. I think it's like 0% long-term capital gains.
Yeah, just really trying to foster development and get investment in there. Yeah.
Yeah, it's an exciting opportunity. It's something that I've thought about with I'm my father's Puerto Rican and Mexican, and so I'm like, oh, it'd be nice to go down there, have a second home, but we'd have to spend 6 months out of the year in order to make it work. And that Hurricane Maria kind of changed my attractiveness to it. After seeing that they were hit so hard that it made it a little bit less attractive. But the point of the discussion and just us having what do you know about this, what did you hear about that, is the bouncing of ideas across professionals and across disciplines and being able to leverage that. And I think that not enough people understand the value to that. And can you just speak to your firm has the unique focus of having the tax lens, if you will, to be able to make some decisions. But what has been your experience with the value for your clients when they sit down and they're treated like an executive, where they have all their professionals sitting around them and making coordinated decisions? Can you speak to some of the cost savings, some of the implementation, some of the benefits that come with that? Because I just don't think enough people really understand why that's so attractive.
Let me see. I mean, it's invaluable to a client to have all of their advisors on the same page. And that's something that we try to facilitate at our firm. We just get permission from the client to go ahead and reach out directly to their financial advisor, to their CPA that prepares the tax returns, to the trust company representative that administers their trust. And so we're very used to working collaboratively with our clients' other advisors to best serve the client. So it's invaluable, and it saves time. So we're billing less if we can just go ahead and confer directly with the people that know best, because oftentimes our clients really don't know what's really going on behind the scenes with their assets. Especially a business owner is very concerned with their business. They don't necessarily know what's going on with everything else, and don't need to be concerned with that. That's what you have your professional advisors for. And so having everyone being able to communicate and working off of the same sort of information that's compiled in one area, accessible by everyone, really just streamlines the process and saves time and money.
Yeah, that's huge. And I think the peace of mind, just knowing that everyone is coordinated, is, to your point, just something that you really can't put a value on. We've seen so far this year, a lot of folks were adjusting to the Secure Act, then they were hit with the CARES Act. Can you tell me a little bit about what the major changes are with the Secure Act and what somebody would look at, if they had set up a plan that included a stretch IRA or a stretch Roth IRA? What would be the trigger to come in and have their estate plan reviewed by your firm?
Okay. So the Secure Act, one of the biggest changes is it's accelerating the time that those retirement assets need to come out of those those accounts. So now the longest you can stretch, except for those special beneficiaries, it's a 10-year period. Whereas before you used to be able to stretch it for the life of certain a lot of beneficiaries. Not, I won't say most, but now that stretch is reserved for a surviving spouse, for minor children up until they reach the age of majority, and then that 10-year stretch will then apply, and then all those assets need to come out for certain disabled individuals, and then I believe also siblings that are within a certain age range as well. But a lot of people had created trusts to receive those assets and to administer them. They're either a conduit trust or an accumulation trust. And so now all of those assets need to be out within 10 years. And sometimes that's going to have an favorable result, leaving a beneficiary with a large sum of money that maybe they're not responsible enough or too young to really have access to such a large sum of money. So what we can do is perhaps switch, if it's a conduit trust or if you had things going outright, is to go ahead and have those assets flow into an accumulation trust. However, the kind of catch with that is that the trust tax brackets are not as favorable. So in an accumulation trust, you give the trustee the discretion to kind of control the cash flow, what gets distributed out to the beneficiaries. But any income that is retained in the trust will be taxed to the trust. And so trusts hit the highest tax bracket at like $13,000. And so that is the kind of drawback to having an accumulation trust. But there is another thing that you could do. You could do a Roth conversion and go ahead and pay the tax now. And that way, and then still have those assets be left in trust for your beneficiaries. That way, you don't have that same tax concern. If you were to do that Roth conversion.
I think that not enough people understand that you can actually have a trust as a beneficiary if it's, the trust is a beneficiary of an IRA.
One important thing is you should generally not leave your estate as your beneficiary, because then you're opening those assets up to your creditors. And so your creditors could kind of eat away those assets before your loved ones get to them, because that's, as part of the probate process, it's to make sure all debts are paid. So your creditors are first in line, your beneficiaries are the very last in line. So you don't want to bring those assets into your probate estate if you don't have to. And so that's one of the benefits of retirement accounts and having beneficiary designations. You can directly give your assets to anyone. Another good thing to do with retirement assets is charitable giving, but don't bring them into your estate if you don't have to.
Yeah, no, that's really smart. When you're speaking about the beneficiaries who weren't really ready for the money, that if they receive a large amount of money, do you have any stories that kind of stick out to you? I remember one at a previous firm I was with where it wasn't so much funny at the time, but looking back on it, he inherited about $400,000, and he was not older than 21. And within about 3 years, he had a Toyota Corolla that looked like it was from Fast and Furious, but he had blown through the inheritance that he had received. And so, I always use that as kind of the cautionary tale, if you will, with clients, is that, you don't want that money to be invested in a Toyota Corolla. You really want it to be used for your legacy and for your wishes. Do you have any stories, just to wrap up, they were kind of a little light, but some kind of comical if you look back on it?
With a lot of our clients are extremely laser focused, and they are adamant about avoiding situations like that. But I have come across, I think one of our clients recently had an IRA with some like 40 million in it that was going to go outright, and we cautioned them against that because the beneficiaries were all teenage to early 20s, and we advised maybe you want to put it into an accumulation trust or some. So we kind of caught it before that, because I could only imagine me at 20 receiving what I think there were 4 children, so receiving 10 million just out. I don't think I would have any motivation to do anything else. I would just be having fun. So you definitely want to plan ahead and kind of think about how your assets will come out. If your children are grown, maybe it is good to have it go outright instead of being tied up in trust. Or you can make the trust very flexible and allow for certain things. So if they want to have a distribution to make a down payment on a home, if you want to allow distributions of principal to start a business, then that's fine. So there's so much flexibility with trust planning, and just being open with your advisors about what you're trying to accomplish will help them put together the best solution for you.
Yeah, that's great advice, and it's great wisdom that you're sharing there. To kind of recap what you talked about is the estate plan is a lot more than just passing your assets on to your loved ones after you die. There's also estate planning that goes into factor lowering your taxes, making sure that your loved ones are able to use the money safely, creditor protection. There's a lot of different benefits that you've kind of shared with a good estate plan. Is there anything that you want to say in closing and to wrap up?
I really just hit the tip of the iceberg with all of this. So my contact info is at the end of this. I'm happy to answer any additional questions anyone may have, because yeah, estate planning is something that everyone should really engage in as soon as possible, because you never know what tomorrow holds. And so just making sure that your loved ones are taken care of in the way that you would want is of utmost importance.
Yeah, well, that's great, and I appreciate you sharing your information, obviously your contact information. Folks can get in touch with you via email or through your website, and then you're also on Pocket Plan. I saw that you created a profile there, so if anybody wanted to connect with you that way, then they would be able to do so. So,
yes.
Ken, I appreciate you spending some time with us, and I look forward to seeing you grow in your firm and to seeing you at our next event here as a speaker.
Thank you. Thanks for having me, Nate.
Yeah, well, thanks so much. And what we'll do is we'll wrap up this segment of the Financial Freedom Summit with Ken Jefferson on creating generational wealth in America. And in our next segment, we will discuss how to build a investment portfolio. So give us about 15 minutes to get our next technical issue up on deck. And we look forward to seeing you on the other side. Thanks.